Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, December 20th, 2024, our last broadcast of the year. Ron Quaranta here with my amazing co-hosts and friends, David Brill and Josh Klayman. Before we begin our usual disclaimers, thank you all for joining us on LinkedIn Live and X and on Twitter as well. Obviously, anything we discussed is not accounting, investment, legal, token advice, and obviously everything that we're discussing really is our own personal opinions, doesn't necessarily represent the opinions of our firms. David, Josh, it is good to see you both. Josh, as a deep patron of the theater arts, I know you're going to be hopping off and then hopping back on. So I wanted to say hello to you both. It's been a busy week. We've got the holidays coming up. David, I'm just going to say it. I've resigned myself to failure in our wager. My promise for 2025 is never wager with David again. But David, it's been a crazy market for the past week. What have you seen in the marketplace?
I think we just saw an overreaction to Chairman Powell's, comments after the rate cut. I think both in the traditional market and our market, we saw a sell-off. Obviously, in ours, it was more, it was about 15%. Yeah. But I think this is this is a Christmas sale or a holiday sale. Instead of getting a Santa rally, we got a Santa sale. It's sort of like December 26th came before the actual Christmas holiday. So you could buy things at a discount before giving your gifts or for whatever holiday you celebrate. You got a discount on your Hanukkah presents before Hanukkah came. So I think from that perspective, that's how I'm thinking about it. And, the one other thing I want to say before Josh jumps in is that the altcoins, though, have gotten significantly hit. And so, again, we don't give financial advice, but if there was an altcoin that you liked a few days ago, it is now on a 30 to 40% sale. So you shouldn't be deterred from buying it if you liked it a few days ago at a higher price.
Exactly. Josh, weigh in. Go ahead.
So I've been thinking about this in preparation for our call. Not thinking that hard, but I had some questions for you guys, which is sometimes when I see this happening, shortly before then, in addition, to Powell's speech, but sometimes you see headlines like, X billion in liquidations will be triggered if the price dips below something, right? Yeah. And it does make me wonder, and I'm not saying it's like one wallet or several wallets. I mean, it could be completely decentralized, but sure. Is there something within the crypto sphere that wants to see liquidations of positions and things like that? Could that be a thing?
David, you and I talk about this a lot, and Josh, it's a really intriguing question. One of the things we talk about in the crypto space, David, is there's a significant amount of leverage in the crypto space, and all of that leverage is based on contracts to either buy or sell at specific price points. So, Josh, to your point, and David, weigh in. You track this quite a bit. I think that leverage leads to those conversations about liquidations.
And I would say this, Josh, without going too in the weeds, there are definitely people or entities who like to see people get liquidated and have the opportunity to, profit from that, both to the up and to the downside. So I think what it is, it's a good barometer of where a lot of money is going in. So sometimes you'll see a lot of liquidity where a lot of short positions were opened up, and you'll see a lot of liquidity at that price point. And then on the opposite side, like maybe today, a lot of people wanted to go long, and there'll be a lot of liquidity at, some price today where a lot of people are going leverage long. So, I mean, the bottom line is, you need to have enough margin to back up going leveraged. And it's really not for everybody. And even the smart people get beat, and you see $1.2 billion of liquidations.
David, to that point real quickly as well, and you both know this, the important component of that as well is flows, David, right? And I think one of the interesting things that we often forget, is that a lot of the flows for crypto are still overseas. And when you look at that context, it's not just the market dynamics of interest rates in the US, that's a component of the macro conversation, but that leverage is overseas as well. And there's a lot of contracts that really are invoked when we see these big price swings. But David, to your point, some of the things, a person might like are on sale in many regards, or at least on sale from what they were a couple of months ago. And honestly, I feel like it's good to get the froth out of the market. I think the Trump trade, if we can call it that for crypto, is kind of done. And now it gets down to, all right, what's happening in 2025? What are the use cases and the tokens that make sense? David, Josh, also one of the things, David, we talked about as well. I want to talk about Ether a little bit, David, if we could. We've often talked Bitcoin's gold, Ether's silver, kind of the commoditization conversation. Ether took quite a bigger hit. I think BTC is down 5% on the week, give or take. Double digits plus, double digits for Ether. David, why is that?
Ether is really trading a little oddly as compared to Bitcoin. And, it's been widely reported that a number of hedge funds are shorting Ether. And so I think that has something to do with it. And also, since we don't have staking in the Ether ETFs, there's been less uptake in the Ether ETFs until very recently, which now we're starting to see more uptake. But I think that, we need to remember that while Bitcoin's at an all-time high, or now it's a little bit below its recent all-time high, Ether's all-time high was around 5,000. And right now we're only at 3,300. So we've seen this big run up in crypto generally. But a lot of tokens besides besides Bitcoin are not near their all-time highs. Yeah. So in one way, Bitcoin is outperforming or is performing as it should be, and Ether and the altcoins are underperforming to their historical levels. So it's a really interesting market. But I do think, and I'll tease a comment for later on in the show, something happened recently that I think will also move the dial for Ether.
Josh, do you want to weigh in? Can you hear it? We've stunned her to silence.
Yes. Her family office positions are, in flux.
Yeah, I'm wondering, when you mentioned that a lot of hedge funds or some hedge funds are shorting Ether, do we have any visibility as to why?
So David and I were talking about that in the virtual green room a little bit. I think from a use case perspective, and for folks in the audience, if you've got questions or comments, please post them in the chat. There really is this use case conversation around, do you use the Ethereum protocol or do you use Solana? And David, I'd love you to weigh in on some of this. I've seen use cases and colleagues on the technical side that are building capabilities on Solana. But David, is that part of the reason for that kind of disproportionate sell-off?
Yeah, look, a lot of the meme coins are being trading on Solana. There are different projects trading on Solana, but I don't think there has to be one use and only one blockchain that people are building on. There are going to be multiple ones. Look, I think Ether is very solid. It's growing. There's so many transactions being done, like either on the layer 1 itself or in layer 2s. Yeah. So it's proving to be scalable. But look, people like the new shiny thing too. So you just never know what it is. But I think the hedge fund's shorting it, and I think not being able to, the ETFs not staking it, are definitely two things not in its favor.
Yeah, and publicly, this is publicly available information, David. Again, you and I were talking about this a bit earlier. One of the SEC commissioners has looked forward on how they might approach crypto under a new regime, and her commentary was they might reconsider staking as part of the ETH ETFs that are approved, which, David, Josh, tell me if you disagree, I think is a game changer for flows into some of the ETH ETFs.
Yeah, absolutely. Absolutely. Because also right now you can be staking your ETH and getting, a return on that. And obviously I think you're going to get more of a return, on an ETF. But when you're staking it, the value of ETH goes up and you're getting, the staking returns. You're leaving something on the table right now if you're buying it ETH ETF and not staking it.
Right. And in speaking with some of the sponsors, right, definitely the lack of staking is one of the reasons for which, if people say, well, why isn't there as much uptake? Why isn't the performance the same with ETH as with the Bitcoin spot ETFs? That's, been pointed to. So I think that would be, in many ways, potentially a game changer.
Got it. David, Josh, thank you both so much. Josh, I know you're waiting for the chauffeur and Mercedes Maybach to pick you up. I just wanted to ask, let's kick off a conversation on some of the legal and regulatory stuff very briefly. And I know you're going to be popping back in. It's been quiet from the legal perspective. Josh, am I misreading the tea leaves?
So it has been quiet. It has been quiet. And, much as you just mentioned, the chauffeur, AKA the Lyft/Uber, I've been told that it is 1 minute away. So I'm going to pop off and rejoin from the car. For those watching and wondering why I'm doing this, my children's school has their concerts today, right in the middle of the day. So
And the show goes on. Josh, we will see you in a few minutes.
on the other side, yes.
On the other side. Enjoy the ride. David, it does give us an opportunity. We've got to have the macro conversation if we could. You and I, for the past year plus, have really been concerned about the veracity of data. And we've seen revision after revision. It's not the data anymore. It's the revisions. I want to talk a little bit about some of the economic data that we've seen. Let's talk about the Fed meeting on Wednesday. It's impacted regular, quote unquote, regular markets. I think it's impacted crypto markets as well. The whole world was anticipating 4 interest rate cuts next year. Really hawkish statements from the Fed chair on Wednesday, essentially saying, and I'm paraphrasing, it seems like inflation's stickier. Their 2% goal is now pushed out at least a year. They're looking at only 2 interest rate cuts for next year. David, what's happening with the underlying economic data? What are we seeing?
I mean, I think we're seeing what we've been talking about on the podcast for months now, that inflation is sticky, that these costs are not going away or they're not getting lower, and that rate, increases that you see in inflation are off a higher base. So I think it is affecting, the economy and definitely affecting lower and middle income workers. We often talk about the credit card surcharge that a lot of people are paying now for goods, 3 or 4% on things that, the companies or the sellers were paying before now are being passed on to consumers that I don't think they really talk about, but I think it is also significant. So look, I think he's also in the back of his mind thinking about maybe there's going to be higher costs with potential tariffs.
Yeah.
Look, I think we need to wait and see how that plays out before prognosticate on that, but I think in the totality of things he looks more pessimistic, and those words showed that.
Yeah, David,
what was your reaction when you heard his feedback and what he had to say, and sort of seeing how the markets react to it?
It's always kind of like a guilty pleasure to look at these things and say, David and I were right about the economic data, right, David? For me, it's the crypto roundup, but to me, the crypto conversation is a macro conversation. That's why we bring up things like the macro data. It's why we bring up things like interest rate cuts and the Fed. For example, I was kind of stunned at the tone of the conversation. And I'm kind of stunned how it was reported on, which is essentially so much of the news looked at it and said, well, the Fed's worried about the incoming administration and tariffs. And, arguably, that's not what the Federal Reserve, whatever administration it is, that's not what the Federal Reserve is supposed to be doing, allegedly. And it makes me wonder, David, are they anticipating things and not getting the appropriate data to make those decisions? I don't know, but inflation is stickier than anyone thought. And for anyone who knows economic history, David, you and I have spoken about this. It feels like deja vu all over again when you look at the data from the late 70s, which was inflation's terrible, raised interest rates, thought they beat inflation, started cutting interest rates, and inflation came back with a vengeance. And that's when it hit some of its all-time highs back in 1980, 81. David, am I overly pessimistic about some of that?
I don't think you're overly pessimistic. I don't think prices are going to go up from potential tariffs the way that people are reporting on it. I think if we've learned anything from this election cycle is there's a lot of hyperbole and it makes news and clickbaiting and all that. So I think we need to see what actually comes of it.
Yeah.
And I'm not breaking any new ground here saying that, President-elect Trump likes to use tariffs. He may not enforce them. He may not seek to enforce them, but it's leverage for trading partners, for behavior that he wants to change with some of our border, countries on our border. So I do think it's a little bit of anticipatory worrying that may be a little unnecessary until we actually see what happens.
Yeah. David, do we need to see the jobs market get worse to get to the rate cuts that everyone's been hoping for?
Well, I don't want to be a pessimist, but I think the jobs market is worse already. We've seen that, these numbers keep getting revised down. And it looks like, I think for a whole quarter, there were no jobs that were created. And then also, a lot of these jobs were government jobs that I think under the new administration and Doge, we may lose some of those jobs. So I think the white collar job market is worse than what's being reported. And I think there's also this kind of worry and concern that as we go back to enforcing our borders and enforcing, immigration law and, hiring people who only have proper status, that there will be some job dislocations and there may be some, short-term effect. But longer term, I think that's better for the economy on the whole. But so that's, that's another thing to consider.
Yeah.
I know that was a little bit, had a lot of topics on that. But what do you think when you think about the job numbers and what you're seeing?
Yeah, I think the devil is always in the details, and I'm not necessarily saying Bureau of Labor Statistics data is always wrong, but they're frequently revised enough to make me doubt. All of this data looks backwards, David, right? But it looks backwards in what I arguably call a faulty way. And by the time they get to the revisions of what truly happened, Josh keeps popping in and out of the Maybach. Dave, Josh, hopefully you can hear us.
I'm gonna try. If I need to, I'll try and call in from my phone if this
Fair.
doesn't maintain. But I'm doing my best.
Yeah, we're gonna leave Josh for a bit. David, I'm gonna try one more time. She keeps popping back. Josh, we're gonna give you a minute.
Try on my phone. Okay, I'll see you guys.
Oh, bye. David, and again, I want to bring it back to crypto. And one of the conversations you and I often have is the reason we bring up the macro conversation is that now crypto is part of that macro conversation. How do you anticipate how the institutions, and again, given your perch at FTI, you get the opportunity to see a lot across different industry segments, and to the extent you can publicly share, how do you see institutions planning for crypto in 2025?
Well, look, I think it's a couple of different flavors. Certainly, institutions are looking at tokenization and how they can get involved in that and tokenizing assets. I think another thing that's really important is that the broker dealers want to be able to trade Bitcoin and Ether on behalf of their clients. And I think, the wirehouses want to be able to enable their clients to buy these ETFs to, be able to trade on their behalf. So I think there's a lot of pent up demand, both for the institutions to be more involved in the space and for their clients to be able to purchase these assets that they haven't been able to. So I really think personally an underreported story is this demand that exists that they've not been able to cater to because either their compliance folks are just taking a while to approve them or, FINRA needs to approve them being able to trade, on behalf of their clients.
David,
what
let me rip
up. Because, look, we have all these large institutions that are members of the WSBA. Like what do you hear?
I'm with you. I feel like there's a lot of this pent up demand waiting on the sidelines. We'd call it dry powder back in the day, right, David? From a Wall Street perspective, one of the things, I want to rip up the script a little bit. One of the things we want to address here is, David, when you look at these large firms, they either say no to clients or it's got to be unsolicited. And how do you, let me ask you this without giving financial advice, obviously, what do we tell people who say, my brokerage company won't let me trade this stuff? Is it as simple as asking?
Well, look, I mean, obviously, if you're an online broker and you want to be able to trade it and you want to self-execute your trades, you can go in and trade and place an order and you'll see if it's approved or not. Look, I think it's unfortunate that it's taking so long to get RIAs up to speed and comfortable within some institutions. I think it's a mistake. I really try not to give financial advice, but people ask me what I'm doing, or not what I'm doing really, but just what my viewpoint is, I'll share it. But, I'm not in any kind of, FA capacity, but it is a shame that it is taking this long and that, a lot of the major banks are still not, comfortable talking to these products. I mean, they knew this was coming for quite a while, so it's a little bit of a shame. But, I think, the BlackRocks and Fidelities are really ahead of the game, and other ones are going to, a little bit pay for it in market share.
And it is interesting to me. I wonder if they're waiting for that administration change as well. And I put that in context, David. I think it was BlackRock recently released a 2025 view report. and David, correct me if I'm wrong, someone in the audience, I think it was, they thought 1 to 2% for the average portfolio allocated to Bitcoin is probably a reasonable thing to do. 1 or 2% may not seem like a lot, but there's a lot of investment money out there. And that's a lot of money that would be directed to Bitcoin. And yet there are so many of the wirehouses still not doing it. Are they just waiting for a new administration, David?
I think, some of them are being very deliberate with their compliance teams and just taking quite a while to approve them. I think otherwise, look, there are a lot of lawsuits for suitability issues that banks face. And so I think they're just kind of weighing their options. But look, I think, it's unfortunate and they'll be on the back foot with some of their customers, especially the younger ones who want access and don't want to wait a year. And, may move their money or move some of their money other places where they can have access. So,
yeah.
Look, I will tell you, I did a survey, just for knowledge information. Some of the online brokers have a disclaimer, these are high risk products before you make the trade. So I think, some of them are adapting and, the longer some of them wait, I think it's to their detriment.
Yeah. And David, obviously there are many financial instruments out there that are not suitable for many investors. Yeah. And we live in a disclosure regime where I think options, for example, David, you and I can talk about options. We've been in markets for a long time and are comfortable having those conversations, but the everyday person probably shouldn't be involved in futures or options, for example. And when you and I have these conversations, we're very specifically talking about, in my mind, Bitcoin and Ether for the masses per se. You and I talk about altcoins. I think the meme coins for the average person are terrifying, kind of bluntly, and they look at it from a lottery ticket perspective. I still have friends who are not financial markets related tell me, what's the next 4 million%, meme coin, Ron? And my answer is, don't ask me about this stuff. It's still a bit crazy out there. And, the overhang for all of this from a crypto perspective, David, when we started the conversation, talked about, Josh is back.
She's back.
We started the conversation, we need to talk about an incoming administration. We need to talk about the regulatory issues that we've seen. David, we have a nominated new SEC chair, I believe, coming forward. I think there's a nominated CFTC chair coming forward. David, Josh, how do you anticipate the tone and tempo of conversations to change? I doubt it will be on day one. It's all, roses and unicorns for the crypto world, but things are going to get better, right?
I think so, but I want to let Josh jump in because you and I have been having.
We've been yammering on. Josh, what do you think?
Sure. I mean, so I think the answer is yes. Yes, it's better. I think it's also going to be different, right? Because if we think about, yes, there's, I think, extreme positive momentum. And even if we look at, for example, what's happening in the Senate with respect to Caroline Crenshaw's nomination, having that pushed, I mean, I think the messages are being sent across the board, from a securities law perspective, where I do wonder, just in terms of like what the future may hold, has to do with the national security angle. Now, as we've talked about, when people have actually delved into the amount of digital assets or the percentage of digital assets that are used for nefarious activities, is actually a very small percentage, right? At least to my knowledge. But I do think that when we have decisions which are in some ways very positive for our industry, such as the Tornado Cash reversal concerning OFAC's ability to sanction Tornado Cash, I do think that it does open the door to questions about, okay, so what's the government going to do to patch that hole, right? So yes, I think things will be positive. I feel very good about it, but I do think from a national security perspective and sanctions, including with all of the geopolitical changes and instability and certainly the US-China rivalry, I think that's a place where we may see movement that we haven't seen in a while. But what do you guys think?
Josh, really good point. And, again, we say this for the audience often. There are so many, fraud is fraud. Those fraudulent cases should move forward. And there, you're right, Josh. We talk about the illicit component of it, and, illicit activity is bad. And I think there was a report yesterday or the day before, North Korea had laundered or stolen $2.2 billion worth of crypto. David, you might know better, for anyone in the audience, which I think is an all-time high for bad actors in North Korea. So you're right, Josh. There are a lot of national security implications. Shout out to Adam Goldberger, Dina Ellis. We should probably raise this on the next policy update as well. David, what's your perspective on that?
Look, there's a ton of money laundering issues that use cash. A lot of the big bulge bracket banks have, multi-billion dollars flowing through their accounts, unfortunately, that are being laundered. I just think this is sort of an issue in general with currency and the use of currency. And so I don't really think this is a crypto issue. And I think, some on the left and on the Democratic side try to latch onto this as reasons to sort of delay implementations of things. And I think we have a robust infrastructure to deal with this. It will evolve as crypto evolves, but I don't see this being any bigger of an issue than it is for traditional markets and fiat. And in the dollar size and percentage size, I think in crypto it's smaller. And look, if you want to launder money, you're going to have a trail on the blockchain. And
right.
Maybe today, not all the transactions, like we have an excellent tracking and tracing team at FTI, and they're really great at unearthing, transactions. But for argument's sake, if there's some that can't be unearthed over time, there'll probably be a way to unearth them. So
yeah. And David, to that point, we've heard, I forgot, someone famous in our industry had noted it. If you wanted to be a money launderer and you wanted to do it using Bitcoin or crypto, it's probably the dumbest way to launder money. Particularly given some of the tools out there. David, we lost Josh again. Apparently, the Wi-Fi in the Maybach is not as powerful as we thought. I wanted to, when we talk about the regulatory stuff as well, I'm going to ask you to put your prediction hat on. For everyone in the audience, I no longer wager or bet against David for anything. But, and this might be me being overly suspicious, but we've got a few days left before the end of the year. And historically, the Securities and Exchange Commission would spoil some holidays with some kind of an action that we wouldn't have anticipated. David, do we have an opportunity, or do you think that's something that might happen before a new administration comes in?
Well, look, if there are wells notices percolating, within the agency that have been approved, I think we're going to see whatever we're going to see, before, President-elect Trump gets, we have inauguration and Gary Gensler leaves. So I think it's going to be business as usual for the commission until he leaves. So I think if there were things in the pipeline, we're going to see them. Yep. Look, I think that we're going to have a really new focus when Paul Atkins gets, approved as SEC chair. We saw, and I want to really credit the industry for really galvanizing behind, rebutting Caroline Crenshaw being renominated. The industry felt that she was not supportive of the industry, that she didn't take an open mind on things after a judge approved the Bitcoin ETF and she still wrote a dissent. And so I think that great thing about, X and the great thing about, representative democracy is people can raise their voices and say, this isn't, consistent with what we voted for. So I think you saw that at work, and I think that's a really good thing. So my long-winded answer, which I seem to be today, is that I'm very bullish on it, but it will take time. But I have a few predictions for what I think we'll see regulatorily.
We're definitely doing predictions before the end of the episode. Josh, while we've got you, go ahead.
Oh, I was just going to say, and if you guys covered this during one of the periods where I was in either a dead cell site or something else, my apologies, but what does this looming potential government shutdown, in your view, what does this mean for things?
Well, I mean, let's be hopeful that that's a tough one, Josh. I mean, look, let's be hopeful that they've got until 12:01 a.m. to come up with a stopgap spending budget. The human toll is several 100,000 federal employees, are furloughed essentially or not paid in some way, shape, or form. I don't know if from the day-to-day of the crypto world that changes things like enforcement actions. It's a really good question, Josh. I don't know how the regulatory agencies are impacted directly or not by government shutdowns. David, maybe you know.
I mean, look, I think that, I think there's some buffer period of time before services aren't, going to be provided. Look, I think that, delivering a 1,500 page plus bill a couple of days before needing it to be approved is not helpful for all parties, regardless of whom held the pen, so to speak. So I think that, and you've really seen this on X, a lot of people are going through the bill and highlighting things they like or don't like or not consistent with people's understandings. And I think this is really going to be the tipping point to where big bills kind of get jammed through without the light, the ray of sun on them and sunlight on all the provisions. So I think they'll get it resolved. I think it'll take a few days. I don't know if it'll happen today, but I don't think that this is going to last for a while. But we can ask the crystal ball at the end of the program.
I mean, one of the things I was thinking about with this wasn't necessarily like the effect on the regulators or certainly the many government employees who would be affected. It was more, I was thinking about, the original bill, I think I read somewhere it was something like 1,100 pages or something. And then it was brought down to, what was it, like 100 pages or something like that, heavily pushed by Elon Musk and others. So kind of like the coming of the Doge of the Department of Environmental Efficiency, right? And then the sort of, partisan stoppage, at least for the time being, it just made me wonder, like, and I know we don't talk about price, but you guys often have like an idea about like, okay, well, this announcement is likely to have this effect on, demand or on, sort of things. That's sort of where I was going. Like, do you guys think that will have a positive, negative effect on what we're seeing in the market?
I think from a crypto perspective, whatever does stop the government shutdown between now and the next funding cycle, I don't, David, tell me if you disagree. I don't know that it's deeply impactful on crypto prices per se. And I think when you look at some of the stripped down stuff from the original 1,100 page bill, there was proposed Bitcoin crypto add-ons to some of those bills that I think were stripped out. I would argue, Josh, whatever airplane or jet you're going near, but David, tell me if you disagree. I don't know that the government shutdown issue will really be the stuff that moves the price.
No, if anything, I think, it might increase the price a little bit, based on people's views and such. But no, I don't think in the short term it will affect it. Look, I think, there's a change in administration. I think we all would like to see it be as seamless as it can be. But that doesn't excuse, loading a bill with things that aren't consistent with what the parties agreed to or, consistent with this election, for whatever people's political views are, President-elect Trump has a mandate. The Republicans have the House and the Senate for the next 2 years. And, bills and what's coming through, need to reflect that in some way.
David, I want Bitcoin to go up, not to win the wager, but so we can liquidate a little bit of it and get Josh a sat phone. That way she can dial in. Or Starlink strapped to the Mercedes, for example. Mr. Tavares in the audience, thanks for joining us. Big changes coming. Bitcoin as legal tender or stores of value in Bitcoin. This is a really interesting question, David, Josh. Let's address it. We've been talking a lot about it internally, this idea of a Bitcoin strategic reserve. I had the privilege of starting an op-ed with Dr. Sean Stein-Smith, shout out. He chairs our accounting working group. David, Josh, I still don't see the use case play for a Bitcoin strategic reserve. What am I missing?
It's a good question, Ron. Well, first thing, we could have a Bitcoin strategic reserve of the Bitcoin that we currently have confiscated through different enforcement actions and through Mt. Gox. So we could just hold on to the Bitcoin that we have and not sell it. And that could be our reserve, so to speak. So there could be some reserve without an economic impact. I think it could be a very clever thing to do in the sense that if as a country and as as an economy, we think that this is something of value and diversifying what our treasury holds, not the Fed. It could be, an interesting way to diversify our holdings. Maybe we have some gold, maybe we have some Bitcoin, maybe someday we have some Ethereum. I do think, though, that from a business standpoint, that if we were to buy some Bitcoin and hold it as strategic reserve, and if we do it in a way where we're not tipping off the market that we're doing it, I think there would be a lot of value because a lot of countries would feel compelled to do the same, and we could be first and we could benefit from that economically.
I just feel like a federal government playing with a Bitcoin strategic reserve will up volatility. I think large players will just try to react to some of that in a way that will increase volatility, David. And I could be wrong, but
I mean, look, it could. It all depends on how you view, monetary policy and just in general. Like, I'll give you another example. Some people think that Social Security should be invested in the market, and that by not investing in the market, people's returns are much, much smaller than they would be if they were in the market. But obviously, there's risk, attached to that. So I think it's really kind of a greater view. But I don't have a great view right now on the strategic reserve, other than that I think it's very bullish for, Bitcoin holders for sure.
Fair point. Josh, will you be having the conversations in DC when they ask you about starting a Bitcoin strategic reserve?
So I haven't been part of the conversations, but I did hear from some who were talking about this, including some who I'm not sure if I don't think I can say who they were, although it wasn't a privileged conversation. It was like a Chatham House sort of thing. But it was someone who had connections to government who was sort of playing devil's advocate and saying, like, well, is a strategic Bitcoin reserve good for the government, or is it good for Bitcoin holders? Right?
It can be both.
And so, if you are a holder of Bitcoin and you are a government, then yes, those would be one and the same. But interesting distinction that was held. I guess the question is, if you're reserving it, then what do you do with that? Like, I think that was one of the things that they were raising. So you've got this reserve, and are you going to be able to sell it, or will you be able to liquidate it at some point? Like, that's what was asked, was really like nuts and bolts. What is good for the government and the citizens to have a strategic Bitcoin reserve? And I know we all can come up with lots of reasons, but I'm just saying that was something that was expressly asked.
What's the product use case for having a strategic reserve is something I've not seen a fully vetted out answer to. David, Josh, really interesting. I'm sure we'll be talking about early in the year. I want to get to George's other commentary if we could. David Sachs will be tasked with promoting the deregulation of the cryptocurrency industry. What do you think? He's ex-PayPal. The PayPal mafia, apparently, David, is percolating throughout the incoming administration. I'm going to be a little critical here, David. I honestly think an AI czar and a crypto czar should have been separate roles, given how complex and important these issues are. David Sachs, brilliant VC. David, you agree?
I think so. But, look, I think we should take the wins where we get them.
Yeah,
we have somebody who comes from industry and understands the technology involved in government, I think is really important. Yeah. I think one of the challenges in this in our current administration is that there was just a very anti-crypto, and based on some of the comments we've heard from some of the VCs, anti-technology bent within the administration. Mark Andreessen in a podcast interview was talking about how, this administration was looking to really curb AI. And, I don't think that's in the best interest of the economy or the country and for, moving technology forward. Yeah. So, I think it's a good thing that we have one. Is it perfect? I mean, he's a very bright guy from all accounts. And so I think it's a good thing. And, with everything, like we're seeing changes that are going to be put in this administration. I think we're going to have smart people in important roles. And I think we should have an open mind on what they're able to accomplish.
Yeah. Greg Murphy, same as having a gold reserve. Good point. Josh, I'm sorry I cut you off. Go ahead.
So I guess my thoughts with the AI and cryptos are, I actually saw it as a positive having them together. I understand. I totally agree with you that having them separate would have perhaps also been good. But the reason that I thought having them together was a positive is that, at least in the prior administration, and I think in a lot of people's minds who are not deep into our industry or who may have less information, a lot of times people will say, okay, I see the promise. I see the reason we need to win the AI war for dominance, right? Versus like China, other jurisdiction. I think up until now, we've had some challenges in our industry in getting people in certain forms of government, right, to say like, no, this is a war. This is a talent war. It is a an arms race. It is also a race to the moon that we must win, right? And by having it associated in that way with something like AI, where I think maybe a broad swath have seen the critical importance of winning that, I think it puts us in good company.
Fair point.
Right. They're also to ignore, to the want to put it to the side. I'm not saying anyone does want to put it to the side. I would also just say, when we think about regulators, including the SEC, FinHub, which deals with digital assets, has also increasingly been tasked with AI. Right? So it's the same, often at regulators, it may be the same groups of people grappling with both. And so that's another reason why I could see it going together. I will say, with respect to that, David Sachs himself, my recollection is that didn't he have some kind of connection with Solana?
Oh, good question.
Yes.
I don't know. He did.
Correct.
Okay.
And I think that's an interesting piece, to the extent it may be relevant, especially given what David, you and Ron were talking about earlier.
Right. No, David, Josh, good point, rather. Greg Murphy, thanks for the comments. Emma Channing, thank you for joining. Greg Murphy, you don't trade that to talk of BTC Reserve. Leads one to agree more that BTC is or becoming digital gold. Fair point. As we look at a future, David, of a Web 3.0 world, digital gold is something that's going to be a mainstay of how global markets operate. We're approaching time. I know we talked about a full hour. David, Josh, I want to give you both an opportunity to weigh in with some additional topics, and we will go to our predictions round for 2025. But David, what else do we need to cover?
Well, I think the approval of a hybrid crypto ETF is a very big deal. And so in January, we'll have at least 2 hybrid ETFs that are 80% Bitcoin and 20% Ether. Yeah. And I think that's another step forward in this. And we've talked about what the percentages we thought they would be, whether it be 70-30 or 80-20. And I think, this is another step forward in getting people who want to access, to get some hybrid access to crypto. And I think this is also the foreshadowing of index, crypto index funds, that as we get more ETFs that are approved in 2025, the ability to add more of those to an index product. So I really see this as bullish, moving forward. And again, this and the wirehouses allowing their customers to buy crypto, two really bullish themes that we're going to see. Sorry, Josh is bouncing up and down a little bit. I was getting a little.
David, it's a good point, and I got to do the shout out. Emma Channing, you are not lurking. It's always a privilege to have you and Greg and so many of our other folks in the audience. Thank you for being here. And David, I'm going to say it. Emma's in my camp. Ron so should have won the bet. Damn you, Jerome Powell. Josh, go ahead.
So I think in terms of my predictions, perhaps,
sure.
Fact that especially after what's been uncovered through the FOIA requests about the FDIC, and actually people now believing across the board and seeing with their own eyes that yes, in fact, there was debanking, there was choke point 2.0, whether it was called that officially or not. I think we're going to see the tide really turning. I mean, I already have, clients, including financial institutions, where they're saying, hey, well, what should we be implementing if we may want to provide cash management services or traditional banking services, or even support for investment banking services? Because, another prediction is, more crypto IPOs in the coming year. So I think that's going to be, we're going to see a market shift on that, especially now that sort of the curtain has been pulled to the side and the light has shone in. So I think that's that. As you guys know, I mean, certainly there are potential other crypto spot ETFs on the horizon. And I think we'll see that. I also expect that we will see banks and others who will be really moving forward on different kinds of stable coins, including in the US. So I'm extremely excited about the next year and where it takes us.
Josh, David,
what about you, Ron?
Well, I just want to address Emma Channing. I think Emma is spot on aside from being on my team for the wager, David, tokenization for the win. David, Josh, tell me if you disagree. I think tokenization will accelerate. We're seeing more and more of that happen. Not just with the low-hanging fruit of some of the financial markets activity that's happening there. David, do you agree?
I do. And we see clients at, FTI who we work with them on tokenization of real world assets. I think tokenization, we need to evolve in terms of access. So we have, security token portals and exchanges, but the liquidity on them needs to improve. So I think we will see more of that next year too, because I think that's the gating issue is, we have a good friend at Texture Capital, Richard Johnson. He and I were talking, and there are really some unique offerings that are on his platform and that are on other platforms. But the liquidity is still, still a thing in progress. So I think that's something that we'll see over time. I mean, I have a few other predictions, but I have to say to Emma, I'm going to be savoring the steak for quite a couple of hours when Ron, Josh, and I are together. But I will raise a glass of Barolo to you, Emma.
You're way having too much fun with this wager, David. Emma Channing, I have no idea who invented the security token and has been working in tokenization since 2016. Yeah, the tokenization's been around for a bit, David, to your point. And to me, it's also an interoperability conversation that we should probably take up at some future episode. David, let me go back to the ETFs real quickly. We've got our roving correspondent, Josh, now on the move, heading to her private box at the theater. David, I want to talk about one thing when we talk about the ETFs, and we know that they're important for the crypto space. But a friend and colleague said the United States is ETF happy. And I said, what do you mean? He goes, well, you can get junk bond ETFs now. So are we a little overboard on everything needs to be an ETF, David? I'm ripping up the script here.
Look, I think people create products for demand. And and Greg Murphy says tech is there, distribution is key. On tokenization, but look, people want different types of offerings and they want it wrapped in a certain way. So I think ETFs have exploded because people want either single asset exposure, they want index exposure, or they may want industry exposure. Yeah. So I think it makes sense from that point of view. I don't know, on a numbers basis, like I think we probably have more ETF offerings here, but I think other countries have, really been in the forefront of having crypto ETFs. And I think there's a staked ETH ETF in one of the other countries. So I think we're just keeping pace and we're really, meeting the demand from the individual investors on what flavor of opportunities they want to have.
David, good point. Josh, I have to ask, in a previous life, did you want to be a reporter?
A what? A reporter?
Would you have ever wanted to be a reporter? You're on location.
Well, my fourth grade teacher said that I was going to be, like, when they picked what people would be, it was like a reporter / journalist. So yeah, I mean, I'm outside of an elementary. But yeah, just a couple of quick things. And I can't unfortunately see the comments from my phone, but I would just like to flag that or promote that, back in 2016 and security tokens, Emma Channing was doing them. She was instrumental in some of the biggest, most well-known security token raises back then. But I also would like to plug Nick Morgan. And I believe there was that there's some sort of litigation going on or some sort of brief that I saw.
Oh, and the sat phone goes down just as Josh is getting to the point. We lost Josh. Emma, good point, and I hope you don't mind. Within the team here at WSBA, we call you OG Emma because you've been involved for a long time. David, we're approaching time. Let's talk about predictions, and we don't necessarily make price predictions. And I'd love to hear your New Year's resolution before we call it a day.
Oh, wow. So predictions, I think like we talked about, we're going to see, we're going to see an ETH staking ETF. I think with this new SEC commissioner and the new team there, I think we're going to see a number of additional ETFs for crypto products. I think it's better that I don't sort of suppose on which ones they will be. Mm-hmm. But I do think we will see a Solana one. And I do think that any crypto that has regulatory status, I think HBAR is another one.
Yeah.
I think we'll see attempts, I think we've already seen filings, so I think we'll see attempts to bring those to market. As far as price goes, I'm going to leave that till the end. But I do think, Josh mentioned something that I've always been thinking about is I do think there have been a number of crypto companies that wanted to go public. And that I feel like their S1 has been going through major sausage making, we'll say. And I think the sausage will finally be made in 25 and they'll be able to go public. So I think that's really important too. And then the last thing is, we've talked about the wirehouses. I've got to believe the wirehouses are going to get on board, hopefully in Q1, and allow their clients access. And I'm hopeful next year FINRA will enable, broker dealers to trade on behalf of their customers. And the last one, Ron, is I think that someone is going to come up with a really unique and user-friendly product to act as a prime brokerage. So if people want to hold on to their Bitcoin or Ether or other crypto, they're going to find a more streamlined way to lend against that.
Really good points, David. I just want to address the comments. Nick Morgan, this is from Emma Channing, has a series of very influential litigations coming through. Absolutely, Emma, agree. It's worth following and keeping up with Nick Morgan. And Greg Murphy seconds it, Emma. We're going to go with OG Emma unless you absolutely tell me not to. David, New Year's resolution for you, and then I want to talk a little bit about my resolution and predictions if I could.
Every year I kind of reflect on what I've done, what I want to accomplish. So my resolutions for this year are, for this upcoming year is just to be better at what I do.
Nice.
For us to just, make this more engaging and have a broader audience for the podcast. And then, just continuing to be a good citizen of our world and a better parent. So I'm always trying to improve myself. But my one crypto for 2025 is I'm going to try and read more efficiently this year because I read so much. I'm going to try and be more efficient. Maybe I'll use some AI to summarize some of the things that I'm reading.
Nice. David, really good points. A couple of different things. My New Year's resolution for everyone in the audience, you've probably already heard this. Never, ever, ever wager with David again on anything, sports, crypto, nothing. I do promise that I will thoroughly enjoy the Barolo with you, David, hopefully sometime in January as well. I'm not making any price predictions. No, I take that back. 200,000 BTC by the end of next year. That's not a wager, David. Let's just let that go. And like you, I'm going to take a little downtime to learn a little bit more about some of the AI stuff's going on. I think you're right. I think there will be a crypto impact. I'm also taking a few days off. It's a spousal mandated take a few days off or else. David, my wife. It was great to see you at the holiday party. Greg, it was great to see you at the holiday party. We're going to spend a little bit of quiet time for the holidays. But let's leave it there. I think we lost Josh. Hopefully the helicopter will bring her back into the city quickly. David, I just want to personally thank you, old friend, for doing this. I always enjoy our crypto roundups. I enjoy all of our WSBA meetings. For everyone in the audience, thank you so much for being a part of the family. Greg and Emma and George and all of you that watch, if you've got questions for David or Josh or I, info@wsba.co. We will be back next year. It's always a privilege, David. We're going to leave it there. Have a great rest of the year and a great holiday season, everyone.
Yes.
Bye-bye.
Good luck, everybody. Have a great new year.
Bye-bye.